So with the way the market has gone the last few days, and frankly over the course of most of the first 2 months of 2025, it's been a little bit more difficult to find a stock that really sticks out as one that's worth buying for the long term without being so concerned about what it's going to do in the short term this year. However, I think Progressive is definitely worth a look. It's been one I've been looking into more over the course of the past week as a potential buy for the long term. It's obviously doing well today. It's up 2.13%. The last 5 days up 5.75%. And over the past month up 12.8%. Doing very well in 2025. If you compare that to the S&P 500, the S&P 500 was down very close to 1% earlier. It had a little bit of a rally later in the day. But over the past 5 days, it's down 2.66%. Over the past month, down just under 1%. And year to date, just up a little over 1%. So the S&P obviously is one that's going to go up and down, but it's been pretty slow this year. We've had some pretty bad days. We've had some where tech stocks specifically have had some really bad days to start the year, some of which was maybe not for the best reasons, like with DeepSeek and the effect it had on AI stocks for a few days. But there are some, concerns, obviously, with the U.S. economy, the tariffs that are being put in place and things like that. But with Progressive, you're talking about one of the top insurance companies in the United States. You've probably seen their ads literally everywhere on just about any YouTube video or a TV show or sports event that you've watched live. They have ads all the time. They're one of the top auto, home, life, and just general insurance companies in the United States. They even do pet insurance now and some financial services. If you look at how they've been doing, even if over the past 6 months, up almost 15%. Year to date, they're up 15.74% when the S&P is up 1.48%. Obviously, the S&P has a lot of stocks that have been very volatile recently, especially AI stocks towards the top. But let's look at the past year, the past full year, 43.88%, outperforming the S&P 500 by quite a bit, more than double. Over the past 5 years, up 280.7%. The S&P 500 is up 101.58% over the past 5 years. So it's almost triple the return of the S&P 500 over the last 5 years. You don't see a lot of dips here. You see a little bit of one maybe at the end of 2024. But generally speaking, if you look at the trend overall, it's been very good. You also want to look at the price to earnings ratio, of course. It's not the end all be all, as I say, but it is something worth looking at. They have a 19.34 PE ratio, which is pretty low. It's actually very good. A lot of people will tell you, if you listen to stock traders, a lot of times they'll tell you 20 or less. Some people, will say it doesn't necessarily have to be that low. Sometimes I like to look at VOO, which is basically Vanguard's version of the S&P 500. If you want to buy the S&P 500, that's one of the main ones people buy. I like to look at the price to earnings ratio of basically the S&P 500 with VOO and compare that to some of the stocks I'm looking at. Again, it's not an end-all be-all stat. That doesn't mean you should just go around buying anything that's lower than 28.18 on the price to earnings ratio right now. I'm not saying that. Obviously, I'm not giving any financial advice in this video. But that's one thing I consider of how to judge whether or not a price to earnings ratio is actually good right now. This way, you're not necessarily going on anecdotal ideas. You're going on kind of what the standard is right now. So good PE ratio, a little bit of a dividend yield, pretty negligible right now. Another thing is that you see a few articles from like Yahoo Finance and others talking about Progressive being one of the best non-tech stocks to buy for the long term right now. This just came out literally 4 days ago. And we also have 100 hedge fund holders or so that are holding Progressive as a stock. Looking into this stuff, you want to also see what other people's opinions are. Not necessarily because that would change your opinion, but just to kind of see, well, am I the only one that believes this stock is a good buy? And it turns out I may not be. A lot of people seem to be pretty high on the Progressive stock right now. Hedge funds, Yahoo Finance, some other media outlets as well have mentioned it. Another thing I like to look at, of course, as you may know from past videos, is how do employees rate this company? Are they well managed? Do the employees who are on the inside, they'll know better than anybody whether a company is actually well managed or not. Progressive Insurance has a very high score from their employees, 3.9 out of 5 stars. About 3/4 of their employees recommend working here to a friend. What's their CEO like? Also very important and sometimes overlooked. But Trisha Griffith, the CEO of Progressive, a 90% approval rate of the CEO. Very good scores all the way around for Progressive from their employees who know, because they work there on the inside. They know how the company is going. They know how it's being run. According to Robinhood, they actually have a 1.8% dividend yield. I'm not sure why that differs from Google Finance. Maybe you can tell me that in the comments, or maybe it's just an error. But as far as the price to earnings ratio, consistently right around that 19 or so mark. And they've also had a growth in auto policies and improved EPS forecast. Another thing is analyst ratings. Again, not an end-all be-all score, but just another little indicator that's worth at least looking at. Analyst ratings, out of 22 analyst ratings through Robinhood, they have a 68% buy score and a 27% hold score, 4.5% sell score, which is pretty good. Their earnings have obviously been solid as well. Dating back to Q2 of 2023 was the last time they kind of missed on earnings, but other than that, they've hit pretty well on earnings for the most part over the last couple of years. So obviously not financial advice. I'm not telling you to do with your money. This is just something I thought I would share in case somebody found it helpful, and something I've been looking at the last few days in terms of stocks. One that really stood out to me, while a lot of these AI stocks like Nvidia, you look at some other tech stocks like Microsoft, Google, Amazon, that are just kind of having a rough time right now over the past month or two. Obviously, will probably turn around at some point, but Progressive seems to be kind of unaffected by the struggles of some of the tech stocks that have been going on recently. So I like to have a little bit of diversity. I'm not saying I'm a complete believer in doing super diversification. You know, there's different people who will say different things, but obviously if you're diversifying too much, a lot of times you're really capping your upside, and a lot of times that's for people who just don't have time to do their own research. But I think it is also important to have a few different categories of stocks instead of just going all in on tech and AI right now, even though I do think those are going to be obviously the best in terms of growth long term, because that's kind of the next big wave of innovation. That being said, I think Progressive, if you want to get into insurance and get something maybe that will keep your portfolio from just tanking anytime there's a bad day in tech, this is something that I decided to buy a little bit of myself for the long term.